Thank you for taking your time on a Saturday to come here. So we will talk about higher rates higher for longer, or we're looking at rates that are downtrending second half of this year. I'll start with global market outlook. So we'll cover US, we'll cover China, we'll cover Europe, and then we go into local markets, and then some funds where you could position yourself. All right, if you look at this slide, I've ranked it based on top performing on first half of this year. So you could see top performing first half of this year is Taiwan, Nikkei, and then the US markets. We're looking at over also more than 20% returns. And if you look at Taiwan, Nikkei, most of that is actually supported by the generative AI sort of theme. You see a lot of investments into tech, and that's what's driving the market on the top three sectors. The ones that's underperformed this year, you could see is actually Jakarta, Indonesia, Thailand, Philippines, and that's on more the frontier of politics that's been happening, nuances there. And then we see on the currency front that's been a weak, and also on fund flows that has been going out of the country. But I've segregated it. If you look below here, you can see Malaysia. Malaysia has done very well, and you could see here Malaysia. Even if you were to buy the index, is up like 9%. And the one that have outperformed are actually the small caps and the Sharia index. Yeah, so just to get a feel of where we are against the other global markets. Okay, we go into the US. So how's the macro outlook looking at? So in terms of US, we're seeing slower growth ahead. We're looking at about 2.4% for this year, and definitely a slower second half. And you can see as well in terms of the job openings, the blue line over here, you can see that is actually coming down. You also see, we've read headlines in terms of bigger companies that are cutting jobs and try to make themselves more lean. So this is the overall macro. And on interest rates as well, we are seeing that being reduced. So earlier in the year for 2024, we're looking at about 3 cuts over here, but now we're expecting about 1 cut at 25 bips, and then at a cadence of about 25 bips for every quarter in 2025. And this is in terms of interest rate expectations as well. We're looking at 6 cuts to 2 cuts, and even 3 cuts at this moment, since we have been looking at a more dovish role in the US. The Trump comments that's been coming through on the inflation front. I think the Fed also commented in terms of not causing undue stress into the market and looking at employment as another key indicator. Okay, this slide, why we put up this slide on global semiconductor chip sales. So it helps us track in terms of how this segment of the business is doing, and why is it that it's so buoyant, and why is it that North America or US companies, selected companies are doing so well, right? Okay, if you look at total semiconductor sales, it's up 22% versus on a month-on-month versus, or you've compared to the April, is 17%. So you can see the growth there. And then further on, if you look down at the segments, the one that is the most is actually, you look here, the second memory. I can see memory is up 121%, right? So that's the strongest growth, and that's the one that is supporting generative AI. And then the other two, we talked about PC and smartphones. So these segments we talked about here, we have logic and processors. So we do see that a bit rebounding as well in this segment. So it supports our thesis that, generative AI and, the sort of recovery in PCs and smartphones are being evident in some of the shipments. Okay, Europe, we are seeing that growth is picking up, but on a very slow sort of basis, from about 1% this year to 1.4% next year, while inflation is downtrending. And in terms of their interest rates, we're expecting they've cut 125 bips, but they're still looking at sort of macro conditions and data dependent on whether to cut more rates. On China's front, it is an uneven growth, as we know. We put here on the first quarter, you saw at 5.3%. But of course, the second quarter came up and that was not as good at 4.7%. But they still have kept their overall target at about 5%. We do think, the third plenum meeting just ended. I think it seems, more in terms of the policy front on the property front, think there will be more measures that the government would try to support. So some of the measures that we put here is in terms of trade-in scheme on the third. So basically, the government would buy back some of this, properties, unsold properties in the market, and then use it as social housing. So with that, then there'll be less, and then that will support the prices of the property. So as you can see, on the chart here, prices of the properties have come down and continue to actually be at depressed levels at about 11%. So I think that's one main area that is of concern to the government. Also, they have cut interest rates, so it's less for you to borrow. And then they cut the reserve rate requirements for the banks as well, so that they have more liquidity, and also they're able to finance the projects. So we go back to this slide. What I wanted to point out is that manufacturing and infrastructure spending and exports, those actually have been propping up the GDP for China. So external sort of measures actually are doing very well for China, but internally, like consumption and property, that's the one that's lagging and bringing down the Chinese economy. So in terms of what is Kenanga's strategy in these different markets in the US, we think that, into the earnings will continue to drive the market. There's ample liquidity coming in, particularly with the interest rate cuts expected second half of this year. And that's also benefiting from the AI, generative AI sort of a business opportunity. In terms of China, yes, we are monitoring in terms of consumption and property sort of segment, but we are focusing more in terms of valuations on certain segments of the economy that's doing well, and particularly on exporters and certain consumption staples in the country. On Korea and Taiwan, we're looking more in terms of development as well as in the AI space. We're also looking at the broadening of the semiconductor space in PCs and smartphones, and that will continue to drive the market. In ASEAN, we are selective. And in terms of how we look into the market, we look at bottom-up approach and also on value plays. All right, now we go into Malaysia. Okay, Malaysia, we've put it down to key themes, which we would elaborate further so that you get a sense of what is actually driving Malaysia market and why do we call this an investment upcycle. So that's very much supported by infrastructure. We see investments in data centers, in property, rising sort of FDI, foreign direct investments into our country, and also improving exports. So we show you some of these figures and breakdown in which certain companies that have investments as well. And then in terms of the overall, the government also has been doing a good job in terms of execution, in terms of some of the subsidies, rationalization on the fiscal end to try to make Malaysia more competitive. And then in terms of, and even at this stage, the shareholdings are still low. Our markets are doing quite well, with some of the funds being brought back from our local institutions. Of course, risk, we're still looking at geopolitical risks that may derail the markets. We have the US elections that's upcoming as well, and what are the policies that could be, put across that might derail our markets. And also in terms of if the government is unable to, go through with some of the policies. All right, on the economic outlook, we're looking at 4 to 5% for GDP growth, and in first quarter at 4.2%. And I think we have the advanced economic for Q2, and that's very strong. It's at 5.8% versus 4.7% expected. So Malaysia is doing fine. On inflation, it's at 2 to 3.5%. I think we probably are at an upside sort of risk if the RON95 sort of subsidy were to be taken. But we are keeping to this. Consensus is keeping to this range for now. In terms of monetary stance, we're keeping it about 3%, and it's favorable with ample liquidity to support the fixed income investments. On fiscal consolidation, so what's the government doing in terms of lowering our deficit, right? So we have the subsidy side. We talk about electricity and water tariffs that brought back about 4 billion. Fuel subsidies for diesel, about 2 billion back to our coffers. RON95 is still under deliberation. A bit worried about the inflation front if they were to bring this in, but that would bring in about 4 billion. And in terms of the other tax measures, we were all hit with the service tax increase from 6 to 8%. In terms of your online purchases that were less than 500, you will hit with a 10% tax. And then you have, capital gain tax on unlisted shares. But we haven't heard much about the luxury good tax yet. Shareholdings, as we mentioned, is still at a low. It's like 19.6% as of end of May. So what could happen if they were to come back into our markets and we continue to deliver into our earnings? So I think this is something that we're looking at. So if you look at on a month basis, it's at 61 million outflow, but versus the month prior to that, it was 1.5 billion inflow. So as of first half, net sell was at 0.82 billion. So we'll go through now some of the key, investment themes, so it's easier for you to understand what is driving our markets. We'll go on the infrastructure projects. We'll explain a bit more on data centers and the property sales rebound that we could monitor, and then on the FDI and also on the exports front. So infrastructure rollouts, you can see this is on the Sabah Saipan Borneo Highway and also on the proposed LRT, Abayan Lepas LRT alignment in Penang. So these are the projects that are being rolled out, right? So what is, your IGM, your Gamudas, your Suncon, these are the beneficiaries from the projects that you see here. Your Penang Mutiara LRT, you have your various airport expansions, HSR, and even on the waterfront, replacement of the pipes and mitigation. So it's a very buoyant sort of sector for Malaysia. And then we talk about the National Energy Transition Roadmap, NETR. So the biggest is you can see here on number 2, large-scale solar LSS, and that's 2 gigawatt or 2,000 megawatt that is coming in on the item 2. You can see here 2 gigawatt, so that's awarded in April this year. So these are, you can see some of the solar companies that has been benefiting. And then also on item 4, we are piloting 100 megawatt with Singapore for battery energy storage systems. So this renewable front, you see some of the companies that have been benefiting or getting some of the construction jobs because of this push for this national energy transition. On infrastructure data center rollout, I'm sure a lot of you have been hearing about this. So just to get a sense of how much power is being delivered. So one of my colleagues, cover Tenaga, and then she is able to find for us that basically 2023 Tenaga delivered in terms of megawatts, it's about 635 megawatt for last year, over 9 data centers. And for this year, it is expected about 700 megawatt. I think lately, MDEC has been also engaging with investors, and they would say it's growing at about 250 megawatt a quarter. So I think it's very buoyant and it's real. The investments are coming in to the data centers supported by the hyperscalers. And Tenaga also sees potential demand of about 5 gigawatt into 2035, even though they've received exceeding to that about 11 gigawatt from various sort of players. And also these projects are mainly situated in Johor and also in Klang Valley. Okay, so this is just a map for you to have a look at where this data center built out. So you can see in Kulai here, we have the Sedana Tech Park. You can see MN Holdings Yonder Group. YTL, I think a lot of you would have heard on their initiatives, YTL Power. And then in JB, we have Nusa Jaya Tech Park, like JDS Holdings, Equinix. And some of the transactions you would be, if you follow the news, you'll be seeing like Sam Darby Property partnering with Google, Crescendo's, sale to Microsoft, and then UEMS also, able to ink with Logos, and Masing as well with Southville sort of development. So these are real developments. They're putting money in and they're developing the data centers. Yeah, and on the property front, this is a map, Johor linking Singapore, and you could see the companies where you look at the land banks at the end of your annual report. You can see the land banks, and then what are the development values of that. So the biggest is Sunrise. You can see 7,470 sort of acreage there, and in terms of the GDV potential was 75 billion. And then you have Sunway, and then you have Echo. So you can see around here companies that are able to benefit, and also I'm sure you will read about land sales that's happening with these companies that are able to just, have good cash flow. So, the development in Johor is not just only supported by data centers, it's also in terms of some of the infrastructure rollouts that you're seeing. So obviously these companies, are able to benefit from the developments there. And that also includes, we have the Johor Singapore Special Economic Zone. And Malaysia, my second home sort of guidelines, I think today came out a bit more on how the government wants to actually improve this and have more foreigners come into our country. On foreign direct investments, glad to share that as of first quarter, you can see here, first quarter, we've attracted 84 billion, and that's about 13% year-on-year growth. And from this, you can see from here, 84 billion for, foreign direct investment is about more than half, 56% or about 47 billion. And which is the segment that is driving it, right? So it's actually manufacturing. So manufacturing is about 43 billion of your 83 billion, so more than 50%. And what sort of segment is in this manufacturing is actually in E&E. 80% of it is coming from E&E. So that's why the segment itself has been doing very well. And also we see this electronic, this segment as well is supported by your EMS, which is Electronic Manufacturing Services, your AT, your test equipments, and also your outsourced tester companies. Yes, and this is on a year-on-year basis so that you can see last year, our total FDI is at this amount, 330 billion. And in terms of that, similarly, it's actually from FDI is 57 billion. And in terms of which are the segments, we see the EMS, AT, and OSAT companies. And since then, we have been seeing sizable orders for a lot of these Penang and Johor companies. So in terms of this, the government hasn't been just sitting on the sidelines and not doing. On the policy front, they've also been thinking about how to support the semiconductor industry. So they came out with the National Semiconductor Strategy. So government is allocating 25 billion for this. And also with MITI, they're trying to, attract foreigners to come to your country to invest and trying to look for about 500 billion. So what are the sectors, sub-segments, right, that they are actually looking to zoom in on? So we have there as the IC design, advanced packaging, and manufacturing equipment. So they are looking at companies in these areas to help them grow into bigger sort of companies. While foreign investments will be on wafer fabrication and manufacturing of the equipment. On external trade, Malaysia is doing very well. Exports grew 7%, imports grew 13.8%, and we have a trade surplus of about 10 billion. So just showing how buoyant it is. And from that, export grows, manufactured grows about 8%, continue to be very sustainable. And in terms of, from a low base, LNG is a slight negative there, and then agriculture was supporting our growth. Semiconductor, yes, just to elaborate further of what we were seeing, the world semiconductor sales rose 19.3% in May, so that's continued growth that we're seeing here. And that is from a negative 8.2 last year, so you can see the good rebound that's happening this year. And for the rest of this year, WSTS is projecting 16% growth for semiconductor to about 611 billion. So this chart explains a bit on where we see the sales increasing, which you see here, smartphones, PCs, and AI, memory as well. That's increasing sales, a bit down and a bit challenging. We see some on the discretionary front, also automotive and industrial segment. But because of new growth and the bottoming coming from such a low base for smartphones and PCs, we see the sales increasing from this segment. So what is our investment strategy for Malaysia? So we continue to believe in an investment upcycle in Malaysia, and that's supported by infrastructure project rollouts. You see the property sector that's been very buoyant. And also you see investment in data centers. And actually it's a broadening out of the market, and you can see a lot of our companies, even going into Q2 results, you will see a lot of good results coming through because projects are coming in. Our economy is doing very well. You can see in the Q2 GDP figures, that will be released, at 5.8%. So I think the market looks very good for Malaysia. Okay, on the final part, we'll just highlight some of our key funds. Okay, yes, bigger here. So this is as of the end of June. So some of the flagship funds is the Kenanga Growth Fund and Kenanga Growth Fund Series 2. Then we have a Sharia Growth Fund. You can see this is the benchmark. So FBM KLCI is 9% as of June, right? So the Growth Fund did 26.5%, and Growth Fund Series 2 did 28%. Whereas our blue chip was trending also above the FBM 100 of 12.5%, it was like above 20%. So most of the funds are doing very well for the first half of this year. So I'll elaborate a bit more on the flagship fund, Kenanga Growth Fund Series 2. It's a diversified fund, so it has exposure to foreign stocks as well. So about 30% exposure, and it's not limited to just Asia Pacific sort of countries that we have named here, but also in the US. Our investment thesis is it has to be a strong, sort of credible, sustainable business model. Valuations have to be compelling. We actively look for companies that are growing better in a segment that is seeing a lot of investments. And also, in terms of we not just on small cap, but it's based on the profile of the company that's able to deliver on earnings. In terms of allocation, this is as of end of May. You can see that it's about 90% invested, about 75% in Malaysia, and quite diversified out. You have your North Asia and US, as you see, and the slide 4, right, with the performance, the key markets that have been performing well. I mean, this fund has allocation into those markets. And who is suitable for this sort of fund? They are looking for medium or longer term sort of investors, and those who or are interested to invest in a company that's not just local, but also have global exposure. Okay, and this is my last slide, just to highlight some that Kenanga do have some global funds. We have the Global Growth Fund and the Global Islamic Fund, and those are also beating the benchmark. We have Asia Pacific Total Return Fund, that's about 14% up, with some Hong Kong, China exposure in Asia Pacific, North Asia as well. And our bonds also have been outperforming the index at about 2% for the first half of this year. Okay, this ends my presentation. Thank you very much, everyone.